Good morning, Tax Goddess family. Today, I'm here to talk about accountable plans. Now, I know I've covered this a couple of times, but it is really that important that you have an accountable plan if you are a business owner. Now, Shauna, what does an accountable plan do? An accountable plan takes advantage of things that you're paying for personally that really belong to the business, okay? So common examples would be your home, right? You probably have a home, maybe you're paying rent or mortgage, you have power bills, water bills, you're typically paying for all of those things personally. But if you have a home office, that means a percentage of that belongs to the business, okay? Another good example would be your car. So if you have a personal vehicle, it's titled to you, but you're driving that car around for business purposes, right? Then the miles on that car are going to be for business use. So you should be getting a percentage or a mileage rate for those miles as a business expense, okay? Now, the IRS has come down really hard on this, okay? If you're a business owner, so Schedule C, partnership, S Corp, C Corp, really doesn't matter. If you are a business owner in any way, rental properties, anything, if you don't have an accountable plan, and you don't have an accountable plan document that's tracking all of your numbers and doing the actual reimbursements, you can actually miss out and the IRS can take away tax deductions that you may have taken. So if your CPA has never ever mentioned the term accountable plan to you, now's the time to get an accountable plan, make sure you're keeping your documents up to date, and of course, maybe switching CPAs, our team would love to talk to you. But anyway, I want to go over some details today because I'm going to show you guys the actual accountable plan that Tax Goddess provides to our clients, okay? Now, depending on when you're watching this accountable plan changes every single year. The rates change, the dollar amounts change, what you can and cannot deduct change. So make sure that you're getting this updated information from your tax preparer CPA team and or your tax strategy team, right? Either way to make sure that you have the most up-to-date information. So let me pull this up. You can see here I'm using my own copy of the spreadsheet. The WOI is how our team collects information from our clients. So this is an example of the accountable plan, all right? And you can see here that it's broken into sections. So this section is for the home office. This section is for your cell phone. For a lot of people, that's personal, and the business is using a portion of it. What about internet? What about your vehicles, right? Auto expenses. Then there could be other types of expenses. So if you've seen our other video on the health insurance, we just covered this. So make sure if you haven't seen that video and you're an S Corp, C Corp, go watch that. But if you're a partnership, if you're a sole proprietorship, those numbers should be here. What about HSA contributions? What about donuts for the staff? What about if you built an athletic facility for your team, right? Or a daycare facility, right? Any expenses that you paid personally that really belong to the business, okay? Now, what you're gonna notice here, and in the two places where people get a little bit tripped up here, the first one is mortgage interest. So this is the interest only, okay? Now, if you're paying rent, it's the rent, right? So it's the total amount of your rent, 100% of your rent. So if your apartment rent is $3,000, this will run the calculation here as for the percentage, okay? So if it's total 3,000 square feet, your home office is 300 square feet, this percentage is gonna be 10%. You're still gonna put in the full amount of the rent. So the $3,000 a month that you're paying, okay? So this trips people up here. Here with mortgage interest, it's only the interest, not the principal portion, okay? So watch that. Normally you can get that number at the end of the year from your 1098 to make sure that your total is correct, but considering you're reimbursing yourself every single quarter, you do need to actually make these reimbursements. Considering you're reimbursing yourself every single quarter, I would highly suggest that you look at your actual mortgage statement and get the amount every single month when they send the statement. They will tell you what percentage, what dollar amount is interest versus what dollar amount is principal. So for this, it's the mortgage interest only. The other piece that often trips people up is the business miles, okay? So business miles are the number of miles that you drove for business, all right? So most people on average drive a normal vehicle, they'll drive about 12,000 miles per year. So the total number of miles driven versus the business number of miles driven. So maybe in that quarter, January, February, March, you drove 3,000 miles for business. That's a lot of miles. 1,000 miles for business, whatever it is. Okay, so this section is going to be your business miles. This section right here is going to be the total number of miles for that vehicle, or in this case, across the various vehicles. Okay, if you have multiple vehicles, this might be all the vehicles. Okay, so if you have any questions, the biggest thing that I really want to bring up here, like I said, this is a document the tax goddess has prepared. We offer this automatically to our clients because what we have come across cases where other CPAs never gave any instruction, they never gave any guidance, they never gave this is a simple calculator, right? It's a spreadsheet, never gave anything to their clients. There's one case that always breaks my heart. When we did this with a client, she was a professional speaker. And when we did this with a client, there was about $190,000 a year of tax deductions that she was not taking because her CPA never walked her through this, never, ever gave her these instructions. And at $190,000 a year, to me as a tax strategist, that's like a stab in the heart, right? I want to make sure that you guys are getting every penny, reducing your taxes to the bare legal minimum. That's how I ended up as a tax strategist, right? That's my job, is saving people millions of dollars by using totally above board. This is like, you guys have heard me talk about my aggression scale, 0 to 10, 0 meaning the IRS never calls you never ever, except for a random audit, 10 meaning we're all going to jail. This is like a -2, right? This really isn't a strategy, but it's something that CPAs miss and fail to tell their clients and fail to give instruction all the time, okay? So in order to have an accountable plan and do it properly, you need to have a plan, okay? So there's actually a plan document. And if you want one of those, just reach out to our team. We'd be happy to send you a copy of the plan document so you can have this for you. We might ask you a few questions, make sure that we're getting the right information for you, but reach out to our team, taxgoddess.com. We'd be happy to chat with you about that. So you need to have the plan document. You need to actually record your expenses, right? Track and record your expenses accurately. Not just rounded numbers, like not 3,000 miles, it would be 3,296 miles. Accurately report your expenses. And then, of course, make sure that every quarter you are, in fact, actually reimbursing. So for 2023, we're going to be reimbursing the end of the first quarter within a month after the end of the first quarter. Okay. Now this is really set up by company, by CPA. You could do this monthly, you could do it quarterly. We really don't recommend that you go more than quarterly. So don't do it just for a year. Really, the IRS wants to see that this is a real plan, a real document, and that your company is following its own regulations and programs that it set into place. So I hope that explains. And, we get tons of questions on this. So as I said, if you have any questions for our team, don't hesitate to reach out. You guys know that that's what we do. We significantly reduce people's taxes, and sometimes it's through simple things just like this. So if you think you might be missing a $190,000 deduction, don't hesitate to reach out to the team and I. Let's see how much we can find for you. Hope you're having a great day, and we'll talk to you later. Bye.